Hey, welcome back. In one of my outdoor walking videos, it's December 1st, and I thought just to drop a short video on, unfortunately, some bad news. We're still seeing more bloodbath at the moment, including Bitcoin. They've lost, I think it's $6,000 ever since the markets have opened in Asia, and I think it could potentially relate to the yen's crisis at the moment. The Bank of Japan governor have made claims that it's to do with this continuing debacle over its interest rate setting on the yen that's causing this crisis, and they're really having it difficult, as most nation states globally, right? It's trying to find ways to cut down the inflation that they're in. It's very, very high. It was actually well above the projected 2% standard CPI rate that the Japanese have set themselves to meet, which they're finding it difficult to bring it down to those levels, which is very alarming, because you would have thought that in the 21st century, the technological era that we're in, that we should be living in a deflationary rather than an inflationary environment. So I think it could relate to that. But there's a glimpse of hope and optimism on the other side. I've made a couple of videos explaining that December 1st, as it's captured in the Fed Chair Powell's minutes from the last Monetary Policy Committee meeting minutes, where he's confirmed that they're going to end its quantitative tightening, which means putting an end to the cut on the liquidity. So what the US have done over the years, as with most governments and central banks, ever since the height of the pandemic era, they've actually felt that they had to sell off the bonds that they've purchased. And what that means is, whenever a central bank decides to sell off its government bonds or just let them mature, you're in effect cutting off the liquidity that is available in anyone's economy, which obviously the repercussion of that is obvious, right? Whenever you suck out liquidity, you're going to leave very liquidity that is left for the economy to function, including the financial markets, even day-to-day investment needs from corporations, or even retail investors such as you and I take out a mortgage loan to buy that next property, right? It all adds up. So it's good news in the sense that the Fed, as of today, December 1st, have made that pledge that they're going to put an end to QT and revert back to QE, quantitative easing, which means they're going to do the opposite. They're going to buy back US government issued bonds to bring that desperately needed liquidity back into the financial market. So not all is doom and gloom, as one would hope when we're in this continuing debacle of bloodbath left, right and center, whether it's the financial markets, equities and stocks, or indeed even with the crypto markets. So what I'm trying to say is, don't let any black swan events such as these distract you and do the wrong thing, right? To sell off your investments, because that's what the whales and the large corporate institutions are banking us to do, right? Create the hysteria, the noise and the FOMO, so we fall into the trap of selling off our high valued, most desirable, scarce assets. So the point is, let's not get distracted. Let's not fall into the trap of panic sell, and always maintain that long time horizon of your investments decisions in your portfolios. So treat this as another day at the office, and if you have spare cash floating around, as I have been advocating in many of my videos, well, you should add to your existing positions and DCA and just hodl and just see through this storm that we're in, which at some point will have to come to an end. And I honestly believe the Fed, having the largest central bank balance sheet in the world, putting an end to QT and reverting back to QE, that will bring in more liquidity, as I said before, which should then hopefully turn around this bloodbath situation to one of recovery towards the year end. So that's all I have for you today. Let's keep our chins up, do not despair. There's always good news to look forward to. So until next time.